dig it, Satch?
All right, what's good, everybody? Let's get started here talking about the markets today. If you're just joining us for the first time, check us out on jazzwealth.com. Actually, on our website, you can see all the events coming up. We have some good ones. We changed a few things up today. Also, if you're one of our customers, look in your email. You should have the link to the video of the class that we did last night, kind of describing how you can set up your investment accounts, how the wealthy like to do it, and focus on total return rather than individual return, or as far as, you know, performance of an individual portfolio return. Some really interesting things there. I was glad I finally got to put that down on paper. Also, we're going to have our class coming up on how long do the stock market declines last on average. So we did a lot of research. We went back to 1950. So if you want to be a part of that, just keep an eye on our website under the events tab or in the client center if you're one of our customers, and you'll be able to see the dates as well as the descriptions of all the classes coming up soon. We've got a whole bunch of them in the works. Just got to put the research together to get it done. So what we had today, also our portfolio performance posted as well, but you guys know that. Check the website for that under portfolios and performance to see how we do here at Jazz. To take a look at the markets today, not a lot, right? This is one of those days where if you had to miss the day and do something else, not really a big deal if you're a short-term trader. If you're a long-term investor, you're just kind of happy that the markets were higher. There was not really a lot of activity to make you make a lot of adjustments. We're sort of just wiggling inside of the range between yesterday and today. So if we go over to the markets, we could see on the charts today we had a small up day for the S&P. It was higher by 11 points. The Dow was actually higher by 62. The Nasdaq was your winner on the day, adding about 46 points on the day. Now we can see on the charts here, the technical traders are just going to continue to look at this potential move above that sort of range. We don't really have any great news, good or bad. I don't have any news really to go on. So investors for the moment are following the old saying, you never short a dull market. Today was kind of dull, and you can see what happened. The markets pushed a little bit higher. In the news, what you're going to hear a lot about today is retail. Macy's was your big leader today. They reported earnings that were much better than expected. The stock actually broke to new highs, up almost 11%. Earnings came in better than expected, but one of the key metrics that analysts like to look at, which is same-store sales, that one came in way better than anybody had expected. 4.2%. They were only expecting 1.4% growth compared to last quarter, to the same quarter last year. The CEO came out and actually made comments that they were seeing, quote, continued healthy consumer spending, which is good, right? If you're Macy's, you want people out there spending. That actually caused them to raise their outlook for the rest of the year. Very positive. That company is very positive on the rest of their year. What happened there? So obviously the stock shot up higher, but if you take a look at the retail sector as a whole, they got a boost as well, about 1.6%. One of the biggest benefactors of, there we go. One of the biggest companies to benefit from that, and was your leader today in the Dow, was Nike. The stock was up 2.6%. They've had some news about sexual harassment, things like that they've been working through, and I think they've done a great job about it, actually. But, of course, Macy's is one of Nike's customers. So if Macy's is seeing a lot of sell-through, customers are coming and buying products there, well, there's a good chance that some of them are buying Nike shoes. So the shares of Nike, very, very nice move today. Actually, if you're a technical trader, you see the breakout there. You see something you like. Volume was just slightly higher, though I'll give it a little bit of a break because it was sort of a quiet day. So retail is going to be your big mover today. Under Armour was, I believe, the second best performer in the S&P. Yeah, it was today. Depending on which one you're looking at, up about 8 or 7%. Strong moves there for Under Armour. Of course, they're also customers of Macy's. Macy's is also customers of them as well. Walmart did well. Actually, a lot of them did well today. Target also higher by 3%. So good news from Macy's. You could see how that sort of pulled along the whole retail sector. And that was really the moral, or the story of the day, because there wasn't a whole lot else to go on unless you're interested in who Trump paid or whatever happened in politics today. As far as the markets, not a whole lot. I will give you a funny story, though. You probably won't see this on the news. Kellogg's. So yesterday, Kellogg said, hey, look, conditions in Venezuela are getting really bad. We have a cereal factory there, and so we've decided we're not going to produce our cereal there anymore. We're going to back out. Well, today, the Venezuelan authorities actually seized the cereal factory, and the president of Venezuela said that their decision to stop production is both unconstitutional and illegal, and he said that now that they have control, the factory will continue production. How does that work? Like, the government just took over the factory and they know how to make cereal? They're just going to start making cereal? Very interesting story there. Didn't make a lot of media headlines today. The stock, as you can see on the screen, really didn't care less. Big company, little thing like this isn't going to affect it. It was actually up about 0.4%. If we go over to Apple real quick, I thought this was interesting because this is yet another case where Warren Buffett is laughing at all of you. Institutional investors officially are on record. If you look at the 13F filings, if you like doing some geeky research, look up 13F filings for a lot of these companies. In particular, we're going to focus on Apple today. Institutional investors, which would be mutual funds, fund managers, hedge funds, large banks, they reduced their holdings of Apple in the first quarter by 153 million shares. Do the math there. Apple is in the middle of a share buyback program, and didn't Mr. Buffett just buy another 75 million shares? All those shares changed hands essentially from all those people to both Apple and Warren Buffett. That is so impressive to me. Anyways, institutional investors gave back 153 million shares. They reduced their positions. This I saw in the news somewhere. Did I jot it down? This was the largest decrease in holdings for Apple by institutional investors since 2008 during the financial crisis. I did jot that down. Very, very interesting. So a lot of people piling out, the big investors piling out of Apple. Warren Buffett and Apple were like, all right, we'll buy our shares back. Warren Buffett says he'll take some as well. And the stock's moving higher. I'll just go through a few more. What happened? What did I do? I'll go through a few more. Teva, speaking of Mr. Warren Buffett, they doubled down on their position on Teva. So if you follow Teva Pharmaceuticals, we don't talk about it much here because I'm not a big fan of pharmaceutical stocks, but the shares were higher by about 3% today. Berkshire Hathaway just doubled its position. That's basically all that's in the news. If you follow exchange-traded funds, the financials didn't do a whole lot today, but the semiconductors did a whole lot today. If we go to the charts there, you could see the semiconductors higher by 1.5%. That helped hold your market higher. So today, retail really doesn't move the needle a whole lot for the market, but because we had the semiconductors in there as well, all is good. A quick check on gold. Remember, gold broke below the 200-day moving average as well as breaking below 1,300 for the first time since December. That happened yesterday. Today, you could see no buying. Nobody will step in front of that train. It's going to take some incredible news and the dollar to sort of fall back down, because remember, gold doesn't pay a dividend, right? So if you think about it, gold doesn't pay a dividend. So if the value of the dollar goes higher, the opportunity cost of gold goes lower. I hope that's not too geeky for you, but the idea is basically just that. If it costs you more to buy the gold in dollar terms, you can either move to another currency and see if it's a value there, which it's not, or you can put your money elsewhere, and that's what people have decided. Take their money out of gold and put it elsewhere. Let's not bore you guys to death on that one. One last thing that's been in the news. Come on. Let's look at the 10-year. 10-year notes moved to a new high today, or in terms of prices, moved to a new low. They hit the 3.1 mark. I believe they hit the 3.1 mark. If not, they were just a couple ticks away from that. So the 10-year continues to rise. Look at it compared to the 30-year, rapidly catching up. And remember, the long bond doesn't move as fast, so it could be a very flat curve here pretty soon if you're interested in that. Anyways, we'll wrap it up there. We'll keep it short today because we did a great class live today for you on our YouTube channel at 1 o'clock. So we'll stop there. If we have any questions, I will take a minute to answer them for you. Feel free to post. Otherwise, we'll wrap it up. Is it exactly 1 year for stock to be considered long-term for tax purposes, and how does it work if the same stock is purchased on 2 or more different dates? So that sounds like a question from like a financial planning class or something. I'm getting quizzed here. So here's how it goes. 1 year and 1 day is the exact IRS rule. So 1 year from the date of purchase and 1 day. That's what has to happen. So counting it on the dot by 1 year won't do the trick. That'll be short-term capital gains for you. And you are first in, first out on that one. So if you bought in multiple lots, your first in is considered the first out, which is an advantage to you. So that's how that's considered for tax purposes on that one as well. Thanks for the question there. That's it's been a while since I've had to answer that one. Vert says, so how about oil prices? Some are saying we're going to see $90 a barrel soon. Is there an opportunity there? If you do think so, right now buying oil futures is actually an advantage to you versus a disadvantage. Short answer there is oil futures expire in increments, and normally you'd pay a carrying cost, but in this case prices are actually lower in the earlier expiration than they are in the later. If I did say that right? I'm not sure if I said that right. So you could actually look to oil futures if you're interested in that. Otherwise, there's a lot of great ETFs that follow that. The price of oil moving steadily higher is, I could agree. Yeah, Vert's got the right idea. You could easily see a steadily moving price back towards $90 a barrel, especially since people are essentially over the whole electric car thing. I had a whole conversation about that the other day where, remember ethanol? How ethanol was going to be the next great thing, and oil got all wild and stuff because people were going to buy ethanol instead of using oil. Well, some farmers out of Iowa got smart and said, yo, wait, there's not enough on the planet, and so that sort of died off. Well, same thing with electric vehicles. They're not really helping anybody significantly to the point where we could say, let's all change to electric vehicles. Doesn't work that way. So I think people have come around to that. Some of the pressures and the back and forth between us and Russia seem to be quiet for now. And the U.S., of course, has gotten a lot stronger with their fracking and all the different sort of technology that we've picked up on there as well. So I can argue with you. I would say that's a good idea as far as steadily increasing oil prices. I don't think it just rockets up to $90 barring some major catastrophe. All right, we'll wrap it up there. Thank you for joining us here. If you have any questions, feel free to leave them in the comments section. Otherwise, you know where to find me at jazzwealth.com. Be sure to check our events section. Lots of great classes for our customers coming up. I'm so excited. We are going to do so much more for you until it kills me. I want you guys to see the value, to see how much you get at Jazz, and most importantly, to see our whole mission in life, which is to help you with the retirement accounts, but help you keep your dough straight in the short term so that you can be a well-rounded, financially perfect individual. And we're getting better and better at that every day. So I appreciate you guys watching. If you need me, you know where to find me, and we'll talk to you soon. Have a good day.